Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In today's video, we're going to talk about what I've been doing the last 3 weeks, as well as my new margin position. And let's get started. So as you guys know, on this channel, we borrow money to make passive income. And normally what we invest in are income paying assets. So over time, these income funds can pay for other investments, or you can pay down whatever margin debt that you have accrued. Overall, my portfolio is worth $252,404.62. It is interesting that my account value on the main page is only reflecting $252,000, especially since my Tesla position is now worth over $388,000. And I did email Robinhood to get some clarity, and what they said is because I'm selling 9 covered calls, they said that the portfolio value reflects however much it would cost to close those holdings. So technically, if my account value is my Tesla position is $388,000, and it costs me about $15,218 to close this position, that's about $137,000. So you subtract it, and that's where you get this number. However, I did open up some new positions, and my total amount of equity is worth over $500,000. So we have my equity position here and then the margin position here. And so about 50% of my portfolio is in margin now. So if you're looking at a pure numeric value, $285,000 is a lot of money. I opened up a $300,000 position XDTE. I had $11,000 of cash sitting around after selling the covered calls in Tesla, as well as selling some covered calls in Tesla, and then doing some 0 day to expiration option investing myself. And, that's kind of taken away from the margin amount. And then I got a couple XDTE payments, which we'll talk about here in just a moment. So continuing on, so let's just talk about the different metrics I like to track on here. Since we use margin on this channel, what we always have to do is we have to monitor our margin status. So currently right now, my margin status is a low risk. And it says here I have a $200,000 margin buffer. So what does that mean? So my portfolio value is worth $252,000. My portfolio value can drop $200,000 before I get into a margin call. And this is interesting though, because when I was doing the 0 day to expiration option strategy, or when I was investing in the yield max funds, my option or my margin maintenance was actually higher. It was around $67,000. And my thought process was, if I was going to borrow $300K, 25% margin maintenance on each of that should be about $75K. So I'm really not sure why the margin maintenance is only about $52,000. And I'll show you that in my tab in the other tab in just a moment. But let's continue here. So that's kind of the premise here. So my portfolio can drop 80% before getting margin call. And so that's the biggest risk factor when it comes to margin investing. And, in life, you take risks. Sometimes doing nothing is a risk. Sometimes doing too much is a risk. So you want to find that happy medium balance here. And right now we're trying to make some money here. You can see here my margin interest rate is 5.25%. And I believe that is actually the lowest margin interest rate you're going to get on the market. Interactive Brokers has a pretty competitive one, but I don't think it's as low as 5.25% right now. All right, carrying on. Let's just go through these different positions here. So I am selling this covered call position here. Many weeks ago, when Tesla was closer to, like $250 a share, I sold the 280 covered call. Turns out that Tesla wanted to go on a parabolic bull run, and that's what it did. So my calls got blown past, so I had to roll those options. So then I rolled to the 350, those got blown past, and now I rolled it to the 450. So I have 9 covered call positions where I'm selling the 450 covered call. And actually, I only used to own 834 shares, but between selling all my other yield max positions, doing a couple option plays, I stacked a little bit of cash to cover the other 900 shares, or the other, 67 shares, because I had 834 shares, the other 67 shares from just like the margin investing that I got pretty much for free. And so I was able to sell 900 shares. So I made some good money on that. And when I go into my one spreadsheet, you'll see the amount of money that I made, which allowed me to buy a lot more Tesla shares. Yeah, so that's kind of at, so I'm selling these. And so what I'm selling is the January 15th, 2027 call. I wish I could have rolled them for least amount of time. However, I mean, Tesla is just moving. And honestly, if for whatever reason, if the calls do get signed, I don't want to be caught with only like 400 or like $250,000 or $280,000 or $350,000, which are the other call positions. Like 400, the 450 call puts me at about 405K if I did get assigned, which hopefully I don't. And ideally, I'm going to keep rolling this position. But if Tesla continues to keep going up the way it is, at some point, I'm going to run out of time. It might get assigned and whatnot. But we're going to be in a really good position if that does happen. And then we'll go through my Tesla position. A lot of people don't believe in Tesla. I have drank the Kool-Aid. I have read Elon Musk biography by Walter Isaacson. I drank the Kool-Aid. I understand the AI technology. And this is very much so undervalued in the long term. However, I do think from a short-term perspective, this is actually overvalued. And you can see here, Tesla's up over $168 a share or 63%. Incredible move. You could actually see here that my return is $148,000. However, my cost basis here, it says it's $267 a share. My real cost basis is really $180 a share. However, when I was switching accounts between M1 Finance, Fidelity, and back to Robinhood, my cost basis got lost in the ether. And this is what it says on this, but the real one is really $181 a share. And as you can see here, this is the option strategy. If you're going to borrow money to invest in Tesla, you'd have a 30% maintenance requirement. You can see like what the hedge funds are doing. It looks like they are buying Tesla instead of selling, which is probably what's pushing the price up. And then the insiders it looks pretty even. Besides that, that is it. You know, we're going to have Q4 financials coming up. So it looks like we're trending up. It'll be positive. If the earnings are not to be what is expected, if Tesla has gone up 63%, there's a possibility Tesla can go down 63% on bad earnings. So, you know, there's always that risk involved. But yeah, that's it for the Tesla position. And then we are going to head over here to this XDTE position. So I did open up a 300K position in XDTE. However, now that position is worth, my margin amount is now $285,000 because $11,000 my own cash plus the amount of money in payments already. Because since my last video, I've gotten 2 payments from XDTE when I bought it December 18th. As you can see here, initial requirement 50% and then 25% margin maintenance. You can see all the different holdings here, expense ratio 0.95%. And then if we show more, we're going to talk about our distribution history. So on December 27th, we got paid out $3,418 and they were paying about 60 cents a share. That is a gargantuan amount of money for the XDTE. Their baseline is about 20 cents per share. So the fact that they were able to pay out 60 cents for this round of dividends as well as the one prior, because they also paid 64 cents the week before that, and that dividend amount is $3,622. And then you can see here on December 18th, I bought 3 tranches of $100,000 each. What I wanted to do when I bought these is when I deployed the $100,000, I wanted to see if it was just going to be the initial amount, the initial investment amount taken out of it, or if it was going to apply the margin maintenance amount. So it looked like right away that, you know, if I invested $100,000, that the margin maintenance would apply $25,000, and that's what happened. So then I did again just to make sure, and then I did the third round here. So again, my margin maintenance should have gone up to about $75,000 if it's $300K worth of stuff, but my margin maintenance only says it's $50,000. So interesting that's the case. But yeah, so let's go back to that investing profile. So total amount of equity is about $500,000. Again, like we said, like it's $252,000, but it should be really $388,000. But because of those call positions, I'm selling the call positions, then whatever the price you'd pay to close it out is what's subtracted from this value right here. And then margin to use, you can see here, $285K. The plan here is for the next year, I'm just going to have these dividends pay me weekly, and then I'm just going to keep chipping away from this margin used, where the total amount will be half of my equity amount, not my total amount here. So, I did extend a little bit here, but as the year goes by, it's going to keep chipping it away. And then I want it to be 50% of the equity amount. So, if my portfolio is about $400,000 and I really want to keep it around $200,000, like 50% of margin utilization. As you can see here, total return, I'm up 148K. And then the Roundhill funds, I bought for $53.18. And for whatever reason, the S&P 500 wanted to take a little dump here. And so the Roundhill funds went with it, as well as the bigger dividend payments. So if they paid out 60 cents in for the last 2 weeks, that comes out to $1.24. So at least $1.24 of this NAV price erosion would have been just from the payment of the dividend. So this is the most important tab here if you are a margin investor and investing in these covered call funds, is the margin used. So that's my amount, but then my margin maintenance is only $50,000. And obviously this will fluctuate as the market does its thing. However, if it's $50,000, it's a very, very low amount of margin, and we are in an extremely safe position. As you can see here, $420 worth of interest. And then, if we just go to the history and we go to, these dividend payments, like I've only been holding on to these positions for 2 weeks and I got 2 monster dividends. So no complaints here. And then, some of you guys don't know what XDTE is that they sell synthetic covered calls on the S&P 500, and they are slightly better than the Yield Max funds. And the reason I say that is when the Yield Max funds were selling their synthetic positions, not only would they sell covered calls, they would sell a cash secured put. So you are getting the most of the downside as well. Now, they did pay more in yield. However, you are capturing all that downside with that cash secured put. Now, when you are selling, or when you're purchasing a call position, you also have risk as well associated with it, because you have, like, their XDT or Roundhill is not hedging their bets here. But XDT or Roundhill have been doing a better job at capturing upside as well as paying a steady dividend. And since it is the last week of December, we can discuss my entire year journey of income investing here. So I did update these for now, like the $300,000 XDTE or the 285 position in XDTE. So I put all my total initial investments as well as what the market value is. And for the entire year of 2024, my total amount that was paid out to me was about $48,000. With the margin maintenance, margin fees, margin interest, Robinhood Gold, my total amount in fees is about $2,835.75. Me setting aside 30% in taxes says that I'm going to owe about $15K worth in taxes. If that is the case, I can pull that money out of my Robinhood portfolio, be able to pay the tax man. However, I do believe, because a lot of these funds were return of capital, that the actual amount in taxes is going to be much less, but I just wanted to account for it. So when that time does come, that, I'm not going to be caught not having the money. And then as you can see here, like if you subtract these two numbers, I put my little performance here, and then net gain. So after paying your margin fees and taxes, we've held about $26,000 in our account, which comes out to about $2,000 a month. So if you got an extra $2,000 a month, you'd be a very happy person. Okay. That is like a little bit more than minimum wage money. So, actually I shouldn't, just about. And then, total income minus margin fees is $46,000. Again, good amount of money doing absolutely nothing and having the fund managers do the work. Continuing on over here, do XDTE. Yeah, we got our 2 payments here. Total income has already been $7,000 in the last 2 weeks. And then we have taken a little bit of dip because of the NAV erosion from the higher dividend payments, but then also the S&P 500 went down. But yeah, besides that, this is the new way I'm going forward with the XDTE. We're going to hang on to it, and then, we're going to get that margin down as soon as possible. And then hopefully Tesla continues to go up, because then, again, we're going off a percentage. So, if this portfolio is worth $1 million and 50% of $1 million is 500K. So that would be able to unlock a little bit more margin that I could use to eventually, pay bills. And hopefully at some point in the next couple of years, we could just live off of this dividend income. All right. If y'all have any questions, definitely shoot them in the comments. But besides that, I hope you all have a good one. Take care and peace.